Good afternoon. This is All About Bitcoin, a show dedicated to all things, questions, and markets related to Bitcoin, little b for the currency, and Bitcoin, big B for the network. A collective journey to understand, apply, and use this innovation, all Bitcoin, all the time. And I'm your host, Christine Lee, taking a look at our top stories. Flows into digital asset funds slowed by over $100 million to $373 million last week as some investors apparently cashed out, according to a CoinShares report. Nevertheless, inflows continue to be positive, with Bitcoin netting $290 million of inflows on the week and Ethereum continuing to rise. Year-to-date, Ethereum returns are above 435% versus about 105% for BTC. And Morgan Creek founder Mark Yusko predicting 250,000 Bitcoin within 5 years. The investment management firm CEO telling CNBC that Bitcoin is more than just a store of value, but it's about network adoption and increased usage that will propel the crypto market's top coin to new record-breaking highs. Meanwhile, Swiss financial giant UBS Group is in the early stages of planning to offer digital currency investments to affluent clients. Bloomberg reporting that investment offerings will be a small portion of total client wealth due to crypto market volatility. Options include investing through third-party investment vehicles like trusts or ETFs. And finally, Tom Brady adding Bitcoin laser eyes to his Twitter profile picture, indicating his support for $100,000 Bitcoin. The seven-time Super Bowl champion is said to be a Bitcoin investor and announced earlier this year he will launch an NFT marketplace called Autograph that will list celebrity digital collectibles. So checking in on Bitcoin right now, the CoinDesk Bitcoin price XBX index is currently trading at $56,000, just under $600. Over the past 24 hours, Bitcoin has been down about 1.7%. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data.
The chart of the day is brought to you by Crypto.com, the world's fastest growing crypto app.
All right, take a look at this chart on Doge versus BTC trading volumes. Doge trading volume has exploded and even surpassed BTC trading volume. This is a signal, according to Coinmetrics, a crypto data firm, that retail investor activity is also surging. This, as we've seen mounting emphasis, a lot of praise, or rather frothiness, shall we say, around Dogecoin over the past couple of months. It has risen about 15,000% year to date, and leading up to Elon Musk's, the CEO of Tesla's, appearance on Saturday Night Live over the weekend, we've seen a lot of celebrity endorsements pumping up the price of Doge to all-time highs. So taking a look at our next guest, who has more, joining us to discuss is Coinmetrics Senior Research Analyst Nate Maddrey. Welcome, Nate.
Hey, Christine. Thanks for having me.
So, Nate, what is the significance to Doge trading volume surpassing Bitcoin? You know, on the one hand, it's great to see the crypto markets on a tear. On the other, it's actually quite frightening that a coin that was created as a joke with no fundamentals is attracting such success. Are the markets a little too frothy? What's your take?
Yeah, it's been crazy to say the least. I think we're seeing a really interesting phenomenon right now where we're seeing institutional investors pile into Bitcoin, especially kind of during the beginning of the year. And now we're even seeing them start to pile into ETH. But at the same time, we're seeing this new resurgence of retail investors, which are driving this Dogecoin surge. So we're almost seeing these two different kind of playing fields here, with the institutional investors and retail investors surging at the same time.
Let's take a look at a couple of your other charts. We have one on the CME BTC futures volume. What can you tell us about, how Bitcoin is trading?
Yeah, so this is more of a sign of institutional investors. CME is one of the preferred platforms for institutions to get exposure to Bitcoin. It's not the only one, but it's one of the biggest ones. So as we can see here, the CME Bitcoin futures volume spiked kind of towards the end of February. It's kind of calmed down a little bit since then. And that shows that there's been a big influx of institutional investors. We're still seeing over $1 billion a day, but it's really leveled off since kind of late March. And we've seen that reflected in Bitcoin's price, which has kind of gone sideways since then.
Also, Bitcoin perpetual futures open interest is also rising, as we see in this chart here. Tell us about open interest.
Yeah, so this is another indicator that investors and traders like to use to time market trends and tops and bottoms. We can see that it spiked up in April, and that's when Bitcoin's price hit a new all-time high. But since then, it's gone down and it's really gone sideways. This shows that a lot of leverage has come out of the market. Usually this will go up when new leverage positions are being opened. So all in all, I think this is a healthy thing for Bitcoin. It basically means leverage is resetting and it's potentially getting ready for another run coming up, hopefully sometime soon.
Mm-hmm. And taking a look at the health of the technology behind the Bitcoin network, we see the hash rate. The hash rate has also been rising, and that is amid, go ahead.
Sure. So this is another healthy sign for the network. The hash rate basically is a proxy for the network security, showing how many miners are mining Bitcoin. And we can see there was a big dip kind of in April when there were some blackouts in China that caused a lot of people to panic and sell. But it's completely rebounded since then, which shows that the mining community is still healthy and that hash rate is still on the up and up. Okay,
so the Bitcoin network, it's still healthy, it's still looking good, despite any blackouts in whatever region of the world. We did see that a couple weeks ago. Also, the Bitcoin market value to realized value ratio, what does this one tell us?
So this is an on-chain indicator we like to use. This also helps time kind of local market tops and bottoms. It's basically a ratio of Bitcoin's market cap to its estimated aggregated cost basis. So when this starts going up, it kind of signals that a lot of new money is coming in. We see, again, it's kind of spiked earlier in the year and it's gone down now to levels around December 2020, which is another good sign that the markets have reset a little bit and are hopefully ready for another run.
Okay, so tying all these charts together, we see, on the one hand, Doge rising and trading volumes surpassing Bitcoin at some point. We see a lot of institutional adoption, and that is improving things on open interest and futures contracts. And on the network side and the tech side, we see the hash rate also rising. So what does this tell us about your outlook for Bitcoin in the next 3 months to the end of the year?
So I think there's still a really healthy outlook, and in a way it's good that some of this leverage got flushed out now. We've seen this new influx of retail investors, and if things go the same way they have historically, we'll eventually see those retail investors probably rotating back into Bitcoin. So I think in the short term, we're going to continue to see some volatility and maybe craziness with some of the smaller cap coins, but over the next 3 to 6 months, it should start rotating back to Bitcoin.
Mark Yusko from Morgan Creek saying that Bitcoin will be $250 in the next couple of years. Do you have any outlook or price targets ahead?
Yeah, so we don't really do specific price targets, but I think honestly anything is possible at this point. I think it's very possible that it reaches over 100,000 sometime within the next year or two.
All right. Nate, thanks for joining us and sharing your charts with us today.
Thank you for having me.
All right, that was Coinmetrics Senior Research Analyst Nate Maddrey. Coming up, we'll have more Bitcoin talk with our next guest from OPTIMAS and Crypto Custody Solutions.
We are witnessing the greatest paradigm shift in finance in modern history. Join thousands of newsmakers and influencers talking the future of money at Consensus by CoinDesk. A live virtual experience of leaders, changemakers, virtual reality meetups, keynotes from Ray Dalio, Gary Vaynerchuk, and much more. Get an up-close look at the boom in crypto, the surge of institutional investment in Bitcoin, NFT mania, the breakneck innovation in decentralized finance, and the coming disruption from central bank digital currencies. Join us May 24th to May 27th for Consensus by CoinDesk.
Welcome back. Is your Bitcoin in safekeeping? Maybe not. If you're holding it with a financial institution or large exchange, many of them have subpar crypto custody practices, according to OPTIMAS. The global capital markets consulting firm estimates that $190 billion worth of Bitcoin is currently at risk due to below average custody solutions. So joining us now to discuss is OPTIMAS analyst Suzannah Balluffi. Welcome, Suzannah.
Hi there. How are you?
Good, thanks. All right, so Suzannah, you've authored a research report for OPTIMAS called Crypto Custody, No More Excuses. So tell me about some of your key findings.
Sure. So we were looking at the way that institutions were holding cryptocurrency. And surprisingly, we stumbled across some evidence showing that in not all situations, customers' cryptocurrency was being kept in a way that was truly safe and done properly. We wanted to look at the crypto custody landscape a bit. And so we looked at the different providers that are there to address this issue, namely the technology vendors that allow banks to become cryptocurrency custodians, as well as the cryptocurrency custodians themselves. And so they're really, the title of our report is Crypto Custody, No More Excuses. And we really feel that at this stage, there are quite a few solution providers out there to address this issue, and really that, there shouldn't be as much risk as there currently is.
Mm-hmm. So in the report, you say about 22% of institutional cryptocurrency holdings continue to rely on storage devices meant for individual users. So how dangerous is that?
Right. I mean, if you're a financial advisor, for example, you really, you're, at least in certain jurisdictions, you're required to utilize a custodian, especially if you're advising a certain amount of assets. It really becomes tricky with cryptocurrencies because anyone who controls the private keys controls what happens to those currencies. And so the transactions are irreversible as well, which in the traditional finance sphere, you don't really have that problem. If you send a bank transfer, there's always the possibility of reversing it. And so the situation is quite dangerous when it comes to cryptocurrencies. And for the institutions who are becoming involved, because as you know, there are many banks that are looking to custody cryptocurrency, they really need to ensure that they use a proper solution provider, whether it's a technology vendor who enables them to become the crypto custodian themselves, or if it's a cryptocurrency, a qualified cryptocurrency custodian who can provide the sub-custody for that institution. But either way, this is something very important. Mm-hmm. And, if there is a huge reputational risk.
Well, how can you tell apart, responsible custody versus irresponsible custody among these institutional players?
Right. During our research process, we spoke to a few people who mentioned that they did know of certain, let's say, cryptocurrency institutions or cryptocurrency firms who might be using the devices that are meant for individual investors. As you know, there are numerous USB devices that you can use if you're an individual investor. And it's a relatively safe way to hold your cryptocurrency. Some people might not like it because if you lose the USB drive or you don't, and you haven't backed up your key, there's a problem there as well. But for most individual investors who are willing to accept the risk, that's something that works well. But for a large firm, it's not really a proper way to store cryptocurrency.
It's incredible that they're using the same method that you could use as an individual. A key benefit of Bitcoin for Bitcoiners is that you can have self-sovereignty. You don't need a middleman or a bank to keep your crypto. So do banks really matter? Are they needed or institutions if they're keeping it on, say, a Nano Ledger cold storage wallet?
Right. I mean, right. The Bitcoin's founders, whoever they are, they obviously didn't envision banks, especially the big global custodians, getting involved. But it does seem that the reality is that eventually they are going to be custodying cryptocurrency on their clients' behalf, mainly because there are so many investment funds that are now getting involved in cryptocurrencies, and they simply have to. The regulations force them to. So, although this wasn't the original intention of cryptocurrencies, it does seem that we are headed in that direction.
So regulations surrounding the ability of institutions to store crypto have become clearer. For instance, the Office of the Comptroller of the Currency in the United States will allow banks to store cryptocurrencies for their clients. What are institutional cryptocurrency holdings right now, and how will they grow?
Right. Well, we estimate that right now the market for cryptocurrency custody and brokerage services is around $2 billion and should grow to about $6 billion by 2026. Right now, I believe that we estimated that roughly 30% of cryptocurrencies were being held by institutions, and that should grow to about 50% by 2026 as well. So we do think that institutional participation in the cryptocurrency markets should grow significantly. And I think this is something that, we're expecting, and it does seem like it's going in that direction.
Okay. Suzannah, thank you for joining us. Looking forward to reading more of your report, and appreciate your time for coming onto the show.
Thank you so much.
All right, that was Opimas analyst Suzannah Balluffi. That's it for All About Bitcoin. I'm your host, Christine Lee. Join us tomorrow morning at 9 a.m. in New York for First Mover, your first look at the day's global crypto news headlines. You're watching CoinDesk TV.